Hey there, it's time to learn all about the 2026 Medicare premiums and pricing and find out if you're eligible to have your premiums reconsidered if you're getting charged more than the standard amount for 2026. So let's take a look first at the pricing, and then we'll talk a little bit about reconsideration of premiums. So first off, let's bring up the pricing for 2026. And when we think about Medicare pricing, what Medicare does is they look at your 2024 modified adjusted gross income to determine what you'll pay in 2026. So you'll see they're looking at that 2024 tax return, and that's going to determine what you pay for the 2026 calendar year. If your modified adjusted gross income as an individual was lower than $109,000 in 2024 or lower than $218,000 for a couple filing a joint return, there's no income-related assessment adjustment for Part B as in boy or Part D as in drug. And you'll pay the standard premium for Medicare Part B for 2026, which is $202.90 per person per month. That's what most people are paying. It's generally deducted from your Social Security before you even see it. If you're not yet drawing Social Security, they typically bill you quarterly for this standard Part B as in boy premium. Now, occasionally people have lower income and they can be eligible for a state program that'll cover that $202.90. I have a companion video about that. But for most of us, we're paying this standard premium, and sometimes we're actually paying more. And the more, the acronym for the more is IRMAA, and it stands for Income Related Monthly Adjustment Amount. And how much more you pay is going to be based on how much more you made in that calendar year 2024. So for instance, if you were between $109,000 and $137,000 as an individual, or between $218,000 and $274,000, you're going to pay an extra $81.20 for Medicare Part B. They call that the Part B IRMAA. And they're going to add that on top of the $202.90 for a total of $284.10 for your Medicare Part B. And then if you choose drug coverage, whether that's embedded in a Part C Medicare Advantage plan, even at no cost, or a Part D standalone drug plan, even at no or low cost, they're going to charge you no matter what, if you're at this level, an additional $14.50 per month for Part D prescription drug-related IRMAA, income-related monthly adjustment amount. Now, the highest level for 2026 is if your individual income was above $500,000 or your joint income was above $750,000. You'll see there's all this staggering scale in between. The most expensive earners are paying for Part D, or for Part D and Part B for next year, is for Part B, it can go as high as $689.90. That's a combination of the standard premium of $202.90 plus $487 a month based on this income threshold for a total of $689.90 per person per month for Medicare Part B. Again, whether you choose a Part C Medicare Advantage plan for your additional coverage or a standalone prescription drug plan, whether that's low or no premium or a very high premium, they're going to attach the same dollar amount to high earners for prescription drug component of your plan. And that's going to be an additional $91. So as you can see, this can be quite expensive. And a lot of people wonder, is there a way out of paying more? Now, if your income is consistently high, just realize that every year automatically, Medicare is going to reassess what you pay based on 2 years prior. So this is the 2026 scale. In 2027, they're going to have new thresholds listed here, new amounts, and it's going to be income based on your 2025 going into 2027. So automatically, with no intervention from you, it's always going to be reevaluated every year anyway, based on 2 years prior. So that's why it's important to note, if you have fluctuations in your income, capital gains, sale of a property that's considered capital gains, that all could impact your Medicare premiums 2 years later. Now, the good news is sometimes people are eligible for something called reconsideration of premiums. So maybe in 2024, your income was quite high because you were still working and now you've retired, or you were single and now you're married, or you're married and now you're divorced. If you've had a life change, it's possible to get your premiums adjusted based on that life-changing event. Now, there's a couple of ways to do this. You can actually do it online. I have a link available for you that you can do it online, where you click in, you fill out the form, and you upload it through your online My Social Security account. And you may have to provide additional proof of your eligibility for this, okay? So that's something really important in terms of handling this. Also, if you're not an online person, we have the form available. You can download and print the form, and you can fill it out and mail it in. You can also have an option to contact Social Security if you need to do it that way. So I'll make this a little bit bigger for you so you can see it. But essentially the form, it says 8 pages. It sounds a lot more daunting. You think of an appeal, that feels really daunting, but this isn't such a daunting process. It really is just a situation where if you've had a life-changing event, it's pretty straightforward. And you want to make sure you do this. Some of it's simple. You're just filling in your name and your Social Security number on the form. And then it's going to show you that same schedule that I showed you a minute ago of the different thresholds for IRMAA. You may have received a notice about this in the mail. But this is where you come into action. Wait a minute. Sure, my income was high in 2024, but now I've reduced my hours, or I've stopped working altogether. You're going to mark the reason that your income is now going to be lower, either in 2025, 26, or both, and you're going to indicate that reason and the date of the change. So say, for example, the date of your life-changing event is December 31st, right? Next year, you're going into retirement. So you're going to put in that name and the date of the year. And then you're going to look down and you're going to fill in information. It says if your income has already been reduced by the event, fill in this information. If it's anticipated to be reduced, take a look at step 3. This is where you're going to fill that in. And you may have to estimate your income for the next year. So you fill in that information, and you're going to either mail that in or upload it on your online My Social Security account, or you can drop it off. But the proof can be pretty reasonable. Sometimes they'll even allow an attestation, and you'll show your taxes for the next year to prove that you were eligible for that reduction. You're going to fill it out, sign it, put your phone number, your mailing address. Be careful to put the correct information just in case they need to get in touch with you. And then I want to show you some examples of some of the documentation that they may require. For instance, work stoppage or reduction, that's probably one of the most common categories. Sometimes people have life changes where they get married or get divorced, unfortunately, and you can supply that information through this documentation, and they're going to give you instructions right on the form for how to complete it. I wanted to point your attention to the area of providing the evidence. So the form itself is pretty straightforward. But let's say, for example, you've stopped work. That's probably the most common reason that people do reconsideration. You can get an original signed statement from your employer, copies of pay stubs, certified documents that show a transfer of your business, for instance, if you've closed your business. If you don't have the proof, they're going to accept your signed statement on the fact that you've stopped or reduced your work hours. And then as a follow-up, they're going to want to look at your tax returns for the next year. But I've actually seen people go from the highest income level down to standard just by doing this process. So it's well worth it. So really important that you take advantage of this and get your premiums reduced. You're going to be notified in December, typically, if you're being assessed high earner taxes for the next year. You want to go ahead and complete this reconsideration process here in December to make sure that you can take advantage of savings for next year. If your life change happens mid-year or you enroll in Medicare mid-year, you can do that reconsideration as soon as they notify you, even if it's not at the beginning of the calendar year. So really important that you take advantage of this. There are ways to save money on your Medicare premiums, and this can be the bulk of your cost if you're considered a high earner. So if you have questions about this, I invite you to put them in the chat, and we'll be glad to answer those for you and get you additional tools and information. Thanks, everybody.